Hello, hello, Maverick Traders. This is Rob Reinbold. It is nice to see you here. I am not joined by Mr. Ankit Sharma today. He is off on vacation, so you are stuck with just me. So let's go ahead and talk about what exactly it is we're going to go through in this session. We're going to go through what happened last week. We're going to look at the news. We're going to look at the markets, the equity markets, the currency markets, the commodity markets, and then we're going to boil down and be like, okay, what's going on right here, right now? We're going to take a look at this week's news reports that are going to be coming out. We're going to look at all the broad markets and give our currency baskets all a score. And we're always looking for trading setups and opportunities. So once we get our relative strength and weakness scores set, we will then be able to pair up those currencies against each other and look for the best trades. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? So let's start off with last week. Last week we saw the equities did grind higher. They're up about 2 or 3%, and we got some really good news on inflation. We'll take a look at that here in just a second. We heard from 2 central banks. We heard from the RBNZ. They did not raise rates. That was expected, and they signaled that they are going to be on hold for a while. The Bank of Canada raised by 25 basis points, and they say they are prepared to raise them even further. So, what did the CAD do? The CAD fell on that news. Just another reminder that relative strength and weakness trumps everything. The CAD was a weak currency at the end of last week, and so it did exactly what it should do, continued to fall, regardless of the news. Let's take a look at the economic news last week. First one I want to talk about is the claimant count change out of the UK. You can see this was a little bit weak. The pound has been one of our strongest currencies lately, and the pound chugged a little bit higher this week in spite of this so-called bad news. The other 2 ones I want to take a look at is the CPI out of the US on Wednesday and the PPI out of the US on Thursday. As you can see here, less than expected. Look at that, 0.2% in the CPI, 0.1% in the PPI. This is exactly what the market has been anticipating. This is what the Fed has been wanting. Everything looks like it's coming down to what's called a soft landing. A soft landing is where the Fed slows the economy down just enough to get inflation under control but doesn't kill it. This is like a unicorn. They might have actually done it this time. Truly, truly amazing. The future will judge the FOMC on their actions, but right now it looks like they did it. Let's take a look at last week's numbers. We had a very strong move in the markets again. This is like the 3rd or 4th week in a row. We've had the S&P up almost 2.5%. The world index is up about 3%. Crypto looked really good until Friday. We'll take a look at that chart. The price action on Friday was abysmal in crypto. Gold was higher, oil was higher, everything was pretty much higher on the week. Let's take a look at this move. So last week we had this bull pullback. We had reached up to this high, we hit this, and I said, look, we're either going to hit it one more time and then break out, or we're just going to break out this time. And that's what happened. It broke out this time. So really nice run, a 4-day run, but I do want to focus on Friday's candle, because Friday's candle, this is a candle you get at the end of a run that tells you, oh, it's tired. It's tired. I fully expect we are going to get some sort of pullback next week, but a pullback to no lower than this. So we might give up the last 2 to 3 days in a pullback, but I don't think there's any major pullback coming in the markets. I think equities are likely to stay strong, but as I said, they just are a little exhausted at the moment. Let's take a look at the numbers in the Forex market. The big one that jumps out at you is dollar. Dollar got absolutely crushed. These inflation numbers really killed any hope for people that were hoping the Fed was going to be more aggressive. So the dollar fell apart and the CAD got pulled along with it. Dollar and CAD are starting to show some correlation here. So we need to pay attention to that, because if the CAD has good news, but the dollar's still going lower, it's probably going to drag it down with it. Our two favorite currencies for the week last week on the long side were the Swiss franc and the yen. Swiss franc and yen. And we said we like the Swiss franc better because we said we think the equity market's likely going to be up. So we don't really love the yen when that happens. So Swiss franc was the best performing sector. We also really like the pound, and you can see the pound didn't really do much. The Kiwi decided it wanted to be strong last week, but the Aussie, you can see, did not follow with it. So mostly flat there on those currencies. If we take a look at crypto, crypto was basically flat on the week, but it is a tale of 4 days, great, 1 day, terrible. We'll take a look at these. Friday was a bad day for the cryptos, pretty much erased all the gains on the week. Let's take a look at the market right here, where it is. Let's score it. Equities are at a +3. We are above the 20, above the 50, and the slope of those are both higher. We've been at a +3 now for 2 to 3 months. Everything is looking bullish here as far as equities go. I do want to take a look here at the US 10-year bond. We talked about how just last week we were at 4.1, which was the highest it had been all year long. And we said, hey, if it goes any higher than that, equities are going to have some trouble. The dollar is going to probably continue to strengthen. You can see the absolute collapse. Now, we are back down into this range that we sat for a long time. We're back into this range. So ultimately, this is really, really good for equities, and this is really bad for the dollar. Ultimately, I think we probably stay in this range here for a while. It looks like global rates have likely peaked here, at least in the short term. And here is the crypto basket. All 4 of our cryptos that we trade evenly divided, and you can see really nice bounce. And look, I took a long on Bitcoin, had a nice little gain. I sold half of the position, held the rest of the half, and it got knocked out at break even on Friday. Again, bad day on Friday. We haven't broken below the support, but that's just a bad day. We should have seen at least an approach up to the recent highs before we hit our head on something. This just came out of nowhere and slapped it down. This week's schedule. We have some pretty major news on Sunday night. I try to be very vocal about this to all my traders that I don't trade Sunday nights. I used to trade Sunday nights when I was a younger trader, and look, there's lots of reversals. There's not a lot of volume, but there are a few Sunday nights every single year that I actually am behind a system looking to make a trade, and this is going to be one of them. And boy, I can think this is the only Sunday, even this year, that I've said those words. So yes, I am going to be watching China GDP and industrial production for this number. I would like it to be a bad number, because then I think we have a much better trade, because equities have had such a big run. There's going to be more of a negative reaction with the bad number than if it's a good number. So I always like to see more volatility. So we'll have to take a look at that on Sunday. And then on Tuesday, we've got CPI out of Canada, and we also have CPI out of New Zealand. So if you're trading these two currencies, you definitely need to be watching for Tuesday. And then Wednesday, we have the CPI out of the UK, and we've got employment out of Australia. Both of those on Wednesday. So as you can see, this week is more front-end loaded. Last week was, hey, I'm not going to trade the first couple of days. I'm going to wait to trade until Wednesday. This week, I'm looking to be more active earlier in the week and less active later in the week. Just the data is showing me that's where the action is likely to be. So we have no central bank announcements this week. A nice little break. And we already pointed out the economic reports that are going to be happening. So let's go in and score all of our currencies one by one, and let's find our relative strength and weakness. Let's take a look first at Bitcoin. Now, Bitcoin, again, had a nice move, and I talk about how I really like to buy the bottoms of high bases. I like to buy the bottoms down here. So you can see, ran up here, I took half my profits, and then boom, it got slapped down. So where are we right now? We're at a +1 over here. The problem is that Friday's momentum really, really strong to the downside at the moment. So at the moment, pretty much all cryptos are at -2s in velocity score. Here is Bitcoin Cash. It now broke below its 20-period moving average. I think this thing is going lower. I'm not looking to go short on it, but I think this is going lower here in Bitcoin Cash. Ethereum had a very nice move as well, but again, those were just erased. They were absolutely erased on Friday. So we can only be at +1s here. I really thought that this was going to be the next run of crypto, but Friday's price action said, nope, it is not. And Litecoin, there's really nothing to see here. If you're going to trade a currency, I like Bitcoin and Ethereum. Next up is Forex. Look at that breakdown on the dollar. And not just a breakdown, but we have broken down some major resistance or major support in a range. We've been trading in this range for a long time, and we broke down below it. Okay, so we had this big move down. Right at the moment, you can see we're actually starting to have a little bounce here. I think we're going to get a bounce up to this area, and I think that the dollar should be shorted on any bounce. So I am not looking for any dollar play early in the week, but later in the week, if it pops up, I'll take a short on it if it looks like it's going to roll over. So dollar at the moment is just on the shelf. This is my favorite chart here because I just talked about how the dollar had a big decline and I wanted to have a nice bounce so then I could short it. Literally exactly what is happening with the yen. The yen has been very weak. I wanted it to have a big bounce so I could short it, but I had to wait for the momentum. I had to wait for the velocity to cool off. The yen's been like a +2, +3 velocity for the last week and a half. As you can see, we've got two red candles here that are telling us, hey, the supply and demand picture has changed, and at the moment, it is lower here. So I do like the yen here for a short. And we come on here to the Swiss franc. We liked this thing last week. We like it again this week. It had a big run this week. It wouldn't be surprising at all if we based. So I'm not really looking to jump on this one right away. I think I need to see a couple more candles of a base and then a breakout. But for me, Swiss franc, on any strength or any weakness, any pullback it has, it should be looked at as a long. So Swiss franc is up there at +3 as well. This here is actually another one of my favorite charts. So we had this new high, we pulled back, found our support, but look at this. This bounce kind of fizzled, and look at all these long upper shadows up here. We broke through that. Now look, we do have some overhead resistance up here. It's not going to be smooth sailing, but I do like the euro this week as well. So Swiss franc looks great. It just doesn't look ready right here, right now. This euro looks ready right here, right now. So I do like euro on the long side. And take a look at the pound. I talked about last week how the pound isn't going to be a huge mover. It's not going to just spike up because that's not what it's been doing. This thing has been grinding higher, just grinding higher. So if you do play pound, understand that that's what you're getting in this currency. You're not getting anything exciting, but it is a nice move higher. And we can see we got this pullback. We now have some triggers here. Everything's starting to turn our way. The pound is the best looking currency out there. It's at a +3, +3. So we'll definitely be looking at pound crosses. The CAD, on the other hand, is completely turned around. It was looking really good until 3 weeks ago. And then you can see it is just absolutely cratered. So right now it's in free fall. And whenever something's in free fall, you're always a little bit worried that, hey, there's a big bounce coming. Just like we saw in yen. That is true. That is absolutely true. There is a big bounce coming. But guess what? Right here, right now, it's still falling. So any trades in the early part of next week on CAD should absolutely be looking to capitalize in on further weakness. I like CAD short. I like it better than dollar short. So I'm going in this week looking at CAD short for sure. Here we are with the Aussie. And I just want to point out the daily chart. We're not really going anywhere. The fact that it's not really trending anywhere, I don't like to play this little game of buy support, sell resistance. That's just not the game I play, so I'm just going to skip Aussie. Come over here to Kiwi, and it looks like Kiwi is trying to put together a rally here. We are at a +2 and a +2. So Kiwi can be looked at for a trade on the long side as well. So if we rack them and stack them all together, here is our trend scores. The Swiss franc and the pound are the strongest, followed by the Kiwi and the Euro and Bitcoin Cash. But I would not touch Bitcoin Cash here. The weakest right now is the dollar, followed by the CAD and the yen in that -1 spot. But I do think that -1 is going to turn to a -2 this week. As far as what's moving right here, right now, what's moving right here, right now is Euro and pound. That has all the velocity right here, right now. And then take a look on the other side. What is weakening the most here is Aussie, CAD, and yen. So look, we now know our trades. We know our trades are going to be Euro Aussie long, Euro CAD long, Euro yen long. And the same thing with the pound. We can look at all of those currency crosses for trades for early part of next week. So let's go in and actually look at those charts. Let's talk about entry points and let's build some trades. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? So Euro is my favorite long, and yen is my favorite short. So I'm going to go with Euro Yen. So here we are, Euro Yen on a daily chart. Take a look at this daily chart. This looks really nice. We had this really nice breakout. We had a deep pullback. It looks like this thing is ready to go. So the only question is, where's the entry? Where is the entry point here? I'm on a 4-hour chart. And you can see we got all the turns of momentum we like to see. We like to see this EMA start to strong, move higher. We like to see the RSI come up above 50 and slope higher. We like to see these parabolic SARs start to steepen. This thing looks good right here, right now. I think you can get into it. 153.35 would be a stop point. Now look, that's going to be about 250 pips. If that's not the game you play, you could use something like this EMA as a trailing stop. I think that would make some sense. That's more of about an 80-cent stop here, 80 pip stop on it. So this thing looks really good right here. Let's also take a look at Euro CAD. Euro CAD here, as you can see here, really had a big burst on Friday. So whenever I see this, I always say, hey, you know what? I need to let it base here. We might get a lot of this price action off of this. So Euro CAD, it looks great. Everything looks good on this chart. I just don't think the entry right here looks perfect here. I'm also going to take a look at Pound CAD. I know that we've had a ton of traders trading Pound CAD on the long side. They've all done very well. Great job, everyone. Same thing on Pound CAD. We just had that big spike down in CAD. So, after these big expanded range candles, we typically see some basing. So I think you just got to wait for a base and then buy the breakout. That's all it's been doing here. Been having runs, bases, runs, bases, runs, bases. So you just have to wait for a base on that one. If you did want to take a look at a different pairing, Aussie Kiwi. Aussie Kiwi is one that you could take a look at. The Kiwi is strong at a +2. The Aussie is weak at a -2. And you can see we're getting a nice low base breakdown here. This is looking very, very good on a 4-hour chart. So I think this thing is ready to go right here, right now. You can use trailing stops, either a parabolic SAR, EMA. You can use whatever method you want. But I think this one looks good as well. Aussie Kiwi. I'm still looking at Euro Yen as my favorite cross, but this one does look quite good as well. Let's wrap this up. We think the equity markets are a little tired here. So I don't think you get a big push on equities next week. I see next week being a flattish, maybe a down week in equities, but I don't think a lot of that energy. A lot of times we get bad markets or down markets. They have a lot of energy and they have got a lot of panic and they got a lot of people freaking out. That's not what we're going to get this week unless something unknown happens. It's going to be a nice orderly either pause or pull back, or look, the market doesn't have to listen to me. It could run higher for all I know. But if we do get a pullback, I don't think you need to be like scared of the yen because it's not going to be a lot of energy behind it. As always, focus on your velocity scores. The reason we do that is because you want to pair up the strongest versus the weakest. That is what currency traders do. Don't just look at euro dollar because it's got a chart set up. No. Do your velocity scores first. Then you know what to pair up. Now you're looking at the best trades out there. Everyone have a great weekend. Thanks for joining me. Goodbye, everybody.